how to avoid the 10 big home buying mistakes. But oops, you know what? When I started putting them together with Robert, I couldn't limit it to 10. We couldn't limit it to 10. So we have 13 mistakes. I hope you don't mind. So what are the 13 big home buying mistakes that we want to avoid? All right. Before we get started with that, I want to encourage that you ask questions in the chat. And while I am encouraging that, you never know with the flow and everything, how quickly we might get to your question. And by the way, the person who asked the earlier question said, you're wrong. Resetting means all terms of the loan remain the same except for one thing, the interest rate is lowered.
Oh, I don't know of any lender doing that.
Okay, so the answer is we don't know of any lenders doing that. I'm not the loan expert, but I defer to Robert. Okay, so getting back to this, we want your questions. We may answer them like this. We may not answer a question, but we're going to do our best. And the next thing I want to mention is that we are going to be offering to a lucky party or more than one, a free appraisal or home inspection up to a $600 value. And I'll tell you at the end how that works. So to put this in context, I want to talk quickly about the 5 steps to buying a home. Now, if you bought a home before, this may be old news. Maybe it's a different way of looking at it. But the 5 steps to buying a home. Those are choosing your agent, choosing your lender and getting your loan started, shopping for the home. That's the fun part. I'm not going to pretend that finding an agent is the fun part. Robert's not going to pretend that doing the loan is the fun part. Fun part's looking for the house. Next is your offer. That can be fun or exciting or nerve-wracking. And then after that is the escrow and inspection part after your offer is accepted. And then after that, you close. So I want to kind of give you that to put this in perspective. So, by the way, one other thing I should say is this is the first time we've done this in a webinar setting, and I don't know how long it will take. So we're saying this is 55 to 60 minutes. I don't think we'll run over, but if we do, I apologize. If it's way shorter, I actually have some more information to share with you. Okay, so mistake number 1 is choosing an agent randomly. So there's kind of this assumption or misconception out there. It's like an agent's an agent is an agent. I'm going to submit to you that if you need brain surgery, you're probably not going to go, surgeon, smurgeon, they're all the same, who cares? At the same time, I'm not putting myself on the level of a brain surgeon. Something home is not brain surgery. The point being that professionals vary. So don't just assume someone has a license, it's all the same license, all the agents do pretty much the same thing. Can be a huge difference in the outcome you have. The agent that you choose is going to be advising you on what lender to use. Of course, it's your choice, but they may be saying, hey, use my guy or my lady here as a lender. They're going to be maybe giving you input on what neighborhood. There's going to be a difference of how on the ball they are in finding new homes, advise you on pricing, negotiation, and once you get into escrow, managing that process, giving you advice on inspections and what the disclosures say, etc. So just don't assume, oh, you know what, Fred has a license, let's use Fred. What's the difference? There's a huge difference, so I want you to know that. Now I'm going to quickly get back to the person that asked about resetting, and he said he's actually done it twice, Robert. So there's something you and I don't know. So to that person, I want to say thank you, because I, like you guys, I'm always trying to educate myself. So I just learned something. So maybe next time you could be on our panel, gentleman who asked that question. And I'm not saying your name only for your own privacy. So anyway, mistake number 1 was random agent. Mistake number 2, and this one I'm going to give to Robert, but it's the I need 20% down to buy a home. I need 20% down to buy a home. This is a common misconception. So, Robert, take it from there. I made
I'm glad
a question there.
Mm-hmm.
Yes.
Yeah, I'm glad you brought that up. Yeah, I hear that a lot from buyers when I first talk to them also, and got some buyers are even apologetic. They don't have the 20% down. But I tell them, really, you can buy as little as 3% down. And there are plenty of loans with 3.5%, 5% down. You don't have to be a first-time buyer to get these loans. The focus of the lenders now is really to help people buy a home. We want to get as many people into a home as possible. And the down payment is sometimes the hardest thing for a first-time buyer. Unless you have some help from family, you may be in that 3.5%, 3%, 5% range. And that's perfectly fine. You don't suffer on the interest rates. It's what lenders do, so 20% is not required. The only time you might need 20% down if you're buying $1 million home, $2 million home, in that area, the lenders are going to make things a little bit tougher. They need a bigger down payment. But for most people buying a home, 5% down is pretty much across the board. And then there's 3%. FHA is a good, first-time buyer program too. It only requires 3.5% down.
Okay.
So,
Now, did you mention VA?
oh, I didn't mention VA. Of course,
Okay.
there's a lot of veterans in San Diego.
Yes.
So, with a VA loan, you can buy with nothing down, and really everybody tries to help the veteran. Usually you have situations where you can have the seller pay closing costs and you come in with very little money at all. But you need a little bit of money to start off with because there's a deposit into escrow and you always are paying your first.
So I just want to say, I think you said you need a little bit of money because there's a deposit. You cut out a bit, so I want to make sure people heard that.
Oh yeah, a deposit. When you write your offer, you make a deposit in escrow. And so you have to have a little bit of cash for that. And then there's a little bit of money for like insurance, and you pay part of your first payment at closing. But you can get in with nothing at all with VA.
Okay.
That's really the only loan program with nothing down right now.
Okay. Now someone's asking a good question. It's related to this. The question is, what qualifies as a first-time buyer? I was told that if you don't own a home now, that qualifies you as a first-time buyer. I think there's a little more to that.
Right.
Do you want to share what, let me just say, of course, on the one hand, a first-time buyer, if you've never bought a home, you would be a first-time buyer, but you can also be a first-time buyer if, and Robert, if
you haven't owned a home in 3 years, then you're defaulting to a first-time buyer.
Okay.
And so it's just this a 3-year period is all you have to worry about. Then you get the advantages of anything that the first-time buyer will.
Okay. And then do you want to quickly touch upon first-time buyer programs? There may be a bunch, there may be a lot of information, but you just want to touch on it?
Yeah. I mean, there are some state programs. I know what California did on their down payment assistance loans is that they made the down payment assistance smaller. They'll still do it for first-time buyers. And also we have a program now for healthcare workers and teachers especially. You can still get a pretty good grant program, or sometimes it's not just a grant, but they lend you the money for the down payment on 0% interest loan. No payments are required on it, and you don't have to pay it off until you sell the property. So it's like pretty much a free loan. Rather than waiting to save up that 20%, they'll give you enough to put, in some programs, they'll give you enough to put 20% down. And then you don't have to pay it off till you sell the property. But that's, and it has to be your primary residence. You can't do these programs, with an investment property or so. A lot of lenders are doing the down payment assistance loan. So that might be why you think California's eliminated them, but they are still there. They're just
let me just say you cut out. I think you said a lot of lenders have stopped doing them.
Right.
But some
lenders have
still
stopped doing the down payment assistance, but they are still there with the state of California. So they are still available.
Okay. Now, let me just quickly say, JG, and I'm just giving initials here, asked a question. And JG, if you can do me a favor, this one's a little specialized, and just reach out to Robert to ask that question.
Right.
Rather than us talking about it. I appreciate you asking it, but I think it's too specific and not going to be relevant to the rest of the group, but I do want you to get an answer. And then someone else asked a question that we answered accidentally, okay. There's another question. Hello, would these FHA loans qualify for the same current market rate, or are the interest rates higher comparatively for participating
Like
in these programs? Are you also looking at the
the
chat, Robert? I'm sorry, are
yeah,
you also?
yeah. So the
Okay,
FHA loans, yeah, I can see that question. So on
okay,
the FHA loans, the interest rates on FHA they're probably a little bit lower than conventional loans are.
okay,
Difference with FHA and conventional is their mortgage insurance requirements on FHA are a little bit expensive, but
okay,
they'll do loans that you cannot get done with conventional. So it's first time buyer program nationwide, and we use it when we have to. But it's a good program. You get a lower rate, you pay mortgage insurance, but it's got a lot of leniency with credit. That's the
okay.
big.
So if somebody's credit is, I'm gonna say not stellar, that's a good way to go. And and then let me also
That's the
say,
program is
while you're saying that's a good first-time homebuyer program, it's not necessarily just a first-time homebuyer program, right? You could have
correct.
owned a home already and go buy another home with FHA, right?
Right. FHA is not yeah, a lot of people use it for first time, but it's not you don't have to be a first time buyer to use it.
Excellent. Okay. Um, so somebody asked for your contact information, so I'm just going to say it.
Okay.
So Robert's phone number, because I've got it memorized because I call him all the time. Sorry, Robert, I bug you a lot with questions.
Okay.
858-414-6900. 858-414-6900. Now we have another question. Are they fixed rates? Probably talking about FHA.
Yeah,
So,
FHA and the down payment assistance loans. Most loans right now, especially in that area, are going to be fixed rates.
okay,
The adjustables right now are really for the jumbo loans, the real jumbo loans. So we're not really doing many adjustables for first time buyers or even for low down payment loans.
okay. Now you mentioned jumbo loans because I think we in the industry oftentimes use jargon. So do you want to just,
Right.
since you brought it up, define what a jumbo loan is?
Sure. Yeah, a jumbo loan in San Diego, it's a little different on every county in California, but jumbo loan in San Diego is anything over $701,500. So odd number, but 701,000. If you're above that, then that's a jumbo loan.
Okay. And some of the rules change.
More stricter rules.
Okay. Okay. Very good. Let's see if there's any other, let's see if there's a question. What's the difference between, we got a couple of questions. What's the difference between not a first-time buyer and an investment buyer? So an investment buyer is someone who's not going to live in the property. So if I'm understanding the question, it's a good question. It's a simple answer. And then there's another question. Any advice for Canadian investors in the US? How much down payment is needed for, I guess, a Canadian investor?
In Canadian.
So we're throwing that curveball. Do you have an answer to that
And
one?
they live, well, if the Canadian investor, lives in Canada, going to buy an investment property down here, you're probably going to end up putting more like 35% down. And the rate, the loan program is going to be an adjustable. It's probably going to be a five-year fixed, and it turns into an ARM or maybe even a 7-year fixed.
Okay.
But a little more down payment. But Canadians are good because we can run their credit, and but we process the loan just like a U.S. citizen.
We like Canadians.
Their
My
credit.
daughter-in-law's Canadian. We love Canadians.
Yeah, Canadians. Yeah.
Okay. Well, let's move on from the do I need 20% down, or the mistake of I can't buy a home unless I have 20% down. We've talked about a lot of good stuff.
Right.
But here's another mistake: choosing lender by rate, because you would think, well, I'm getting a loan, I want the lowest rate, so I should choose lender by the rate.
Right.
That's actually can be a mistake if that's the criteria. And I want Robert to take this one because he can say it well. Yeah.
Well, especially when you're first talking to a lender, you want to get pre-approved because you want to be ready to buy. Your first bet is really to go by a referral from friends, family, coworkers, and especially your realtor, because the realtors know who can perform and who can't, and who's going to give you some honest answers.
Robert.
If you sit there on the phone and you call a whole number of lenders and you ask what their rate is, and that's how you're going to choose it, you're just going to go with the salesperson that quotes you the lowest thing you want to hear. Unfortunately, this whole business, when you're hiring somebody as a lender, you're not hiring really the lender, you're hiring the loan officer. And those loan officers are just simply salespeople. If they know you want to hear 3%, they're going to quote you 3%, whether they can get it for you or not. They want you to get your application in there, committed to everything, and then you really find out what it's going to be. There's so many things that affect your rate that I have to know more about you. And you have to get, if you talk to a lender and they say you're pre-approved and all you've given them is some verbal information on the phone, you're not pre-approved. You have to give all your documentation, you know, paycheck stubs, W-2s, sometimes tax returns, everything. Let me go through all of that because there's so many things, even the property you're buying and where the property is can affect your interest rate. So don't be shopping with rates. Most people have the same rates. You know, most people should have the same rates. We're all getting the money from the Federal Reserve. But to get you to that specific rate that you qualify for is not an easy task. You know, you have to really ask the right questions and get the documentation to prove it. So don't be, you know, shopping around for the lowest rate, especially in the beginning. You know, once you know your stuff, then you might be a little bit more dangerous, but still you leave yourself vulnerable to just bait and switch is what you live in. They'll quote you low rate, what it really is in the end. Yeah. I'm sure I can get you the rate anybody else can out there.
And I'm going to say this is somewhat analogous. It's not identical, but somewhat analogous to if you want to sell your home and then you just call a bunch of agents and you say, hey, what's my home worth? And you say, I'm picking the agent who quotes me the highest price. You're probably not going to get that price, but that's, you know, you're picking the one that maybe is the least honest. So if you're calling a bunch of lenders and saying, what's your rate? And, you know, most of the people, whatever it might be, if you're hearing like 3.5, 3.25, 3.5, and then somebody says 2 7/8, that's probably the guy or lady that's not telling you the truth. That's just saying, I'm going to get him in the door, and then we'll find out later what the rate actually is going to be. Would you say that's kind of it, Robert?
Right.
Okay.
Yeah, the nice thing, the way I work is we loan a lot, our own money. We're direct lenders, so we control the whole process all the way through. But broker a lot also. If there's always these situations, we don't have every loan program in our book, but I know when it's time to broker the loan and when it's not. You know, we want to have as much control as we can because we want to close on time and give all the right information to the realtors. And when you go to write an offer, your lender and your realtor are going to work together as a team to get that offer accepted. I talk to the listing agent. I have to sell myself as well as the agent sells themselves, and then we sell you too. So it's a team effort to get your offer accepted. I know many agents that just fax over the offer, see what happens, and you'll be writing.
I'm sorry, did you say fax?
Offers on that.
I think you meant email.
Okay. All right. Right. But anyway, I could go on forever.
You did that just to inject some humor into this. Thank you.
Yes, yeah, okay.
Okay, so that was choosing lender by rate. Now, before I get to the next ones, I want to respond to some of the chats here. So there's two not identical but similar questions. TW says, Wall Street Journal had a story last week regarding people who bought multiple homes, fully financed, ran out as Airbnb, that will be losing their homes to foreclosure in the coming months due to mortgages remaining due but no renters. Would it be better to wait 6 months or so for the downward pressure on prices to buy the foreclosed vacation rental properties? So I said that really fast, just in the interest of time. So basically saying a lot of people bought vacation rentals and now people aren't vacationing. Are they going to lose them? Should I wait and buy those? So first of all, I don't know. I don't know the answer to that because that involves the old crystal ball. But I will tell you, I have reached out to a lot of vacation rental owners locally, and what most of them are doing is just converting them to long-term rentals, so they don't seem to be losing their properties. I'm sure, you know, some of them might, but I don't think it's all going to come crashing down. Now, if this virus situation persists and the lockdown persists, and we don't open up, that could happen, but it seems like we're slowly opening things up. I hear that come Friday, you can go to Nordstrom's and buy your favorite pair of socks at the curb. So I think things are going to get better. Then there's a related question. Let me scroll to it. Looking to possibly purchase investment property, is wondering your thoughts on the market stability over the next 12 months or so. So let me preface this by saying I have an economics degree from UCLA. And here's my experience when I took my courses. I would sit in a course and the professor would say, well, you know, given the situation, if you apply this theory, you get this result. And I'd go, okay, I get it. I understand now. And then he'd say, but on the other hand, you have these other opposing market forces and you get the opposite result if you apply this theory. I'm like, oh, I understood it for a moment in time, but I didn't. The point being, these things are very hard to predict. So two scenarios I see. One is we come out of this smoothly and there's a pent up demand and the market just chugs along and it was like a blip and we go, what happened for 2 months? It's like it never happened. Another possibility is this causes, you know, so many businesses to close and people out of work that yes, the prices go down. I don't know what'll happen. My own well, I'll tell you the market right now in San Diego, I don't think prices have dropped, or if they have, like this much, because while the demand is definitely down somewhat, the supply is probably down by more than that. So I've been talking to a couple of wonderful people that I know, and they asked me about a property, and if I recall, I think there was an offer on it. Then they asked me about another property, and there were multiple offers on it in a couple of days. So the demand is still, or the market's still moving. So that's not the sign of a declining market. So that's kind of a general overall statement. Now, maybe in the $10 million home range, maybe those are going to fluctuate more. I don't know. Hey, I feel like these two people must have been reading my minds, because it leads to the next mistake, and that is expecting a good deal when you buy a home. So let me say that I am also a real estate investor. I've bought and sold a lot of properties over the years. Probably the best deal I ever got was maybe 10, 12% under market. Sometimes I've been happy to buy a property at market and ecstatic if I can get it a couple of percent below the market. So there are people that will call me, they go like, hey, I want to get a good deal, 10%, 20% under the market. That's probably not going to happen. So I would say just don't plan on getting a great deal. Everybody wants one. Once a home is out there for everybody to see, it's rare that for some reason you can get it below market. So that's probably not going to happen. Let me quickly look at the chat here. Only high-end homes have dropped, low-end are steady. So that's a comment. What do I think about commercial real estate? Good question. I don't know commercial very well. I do wonder, and this is just speculation on the retail end, if, 5% of business, 3% of businesses fail, that could lower commercial values and commercial lease rates. At least I hope so, because I'm going to be renegotiating my lease. It's up soon, and I'm going to be trying to get the best deal I can. Okay, so that was expecting a good deal. The next thing is for sale, your private info, and I want to zoom in on that. Where is that? That face there. Yes, for sale, your private info. So, there's a lot of websites out there. You've heard of them, Zillow, Trulia, Realtor.com, etc., etc. Their business model is to attract you to the site, get you to register, and sell your information to people like me and Robert. And I'm not saying that I or Robert buy that information. In fact, I don't, Robert, I don't know if you do.
No.
Yeah,
No.
but that's really that's how they exist. That's how they make their money, is they get you to register and then they sell your information. They go, well, here are names of people that are interested in buying homes. Now here's another related thing. It's intertwined with that. You go on a website, we'll say Zillow, right? And they're always tinkering with their look, but the last time I looked, they would typically have like 3 agents showing next to a property. I don't know if they still do. Maybe I'm behind the times, but there are not three agents handling that property. Typically, the agents that you see featured have nothing to do with the property. They're paying to be there. They're paying the website to get your information. If you contact them, you go, hey, I want to know more about this house on Apple Street. They don't know anything about the house. They've never seen it. They're probably going to scramble to look up the information. If you can't see my fingers, this is typing on a keyboard to find the information. So you can go, oh yeah, right, the house on Apple. It's 600,000, and then they're looking at the photos. It has a nice yard. They don't know anything about it. So if you're on one of those websites, don't reach out to the agent for information. You're just selling your information. What you should do is ask your agent, whether that's us or somebody else entirely, ask your agent to help you with it. So that's mistake number 5, putting your private info out there so it can be sold. So now we're going to talk about mistake number 6, first home, second loan. So Robert, this one's yours. And if you recall, this is doing things in the wrong order. So I'm going to hand it to you.
Right. Yeah, you really don't want to be a buyer that gets out there and finds your house you want to buy, and you don't have your loan approved yet. You may feel that, hey, I can afford this, no problem, but you have to prove to the seller that really can do it. And when you get your offer accepted these days, you have to close fairly quickly. So you don't have time to do much once you get your offer accepted. You're going to be inspecting the property and everything like that. So the best thing, that we always recommend, and it's almost a necessity now, especially here in Diego, to get with your lender, like myself or somebody, and get yourself completely approved. Like I said, give them all your information and actually have an underwriter approve that loan.
Mm-hmm.
So you write the offer. Like myself, I can write a really strong letter. Hey, you're all pre-approved. We show them maybe an automated approval that we have, and even proof of funds that you have the funds for the down payment. Then it's between me and your realtor to sell you and our team to the seller and get your offer accepted.
Mm-hmm.
If you haven't done your homework first, you just can't get an offer accepted right now.
So I'll say, you got to eat your vegetables before you get your dessert.
There you go.
Don't go right to dessert, because
you got that pie at the end, the house.
Yeah, exactly. Because I mentioned the fun part, and this is not a surprise. The fun part is going to find the house. The loan is not the fun part, but you got to eat the vegetables before you get the dessert. Okay.
Right.
So we're going to turn this upside down. We're going to say loan first and then home.
Exactly.
Okay. Next thing. Now, Robert, on this one, I had asked you about you taking it. I'm going to take it, and this is about closing costs, but I want you to feel free to interject if I get anything wrong, or if you've got some smart things. You always have smart things to say. So some relevant and smart things to say. So mistake number 7 is cost confusion. So this is several things I'm kind of putting together into one. So the first one you're going to see here, it says agent with a slash through it, agent $/. So that is my shorthand. And I'm going to tell you a little secret. These are my props. They're also my cheat notes. If I didn't have this, I wouldn't even remember what's on here to tell you. So don't tell anybody I said that. Okay, so the first one, the agent with the $/ and the slash, you almost never are going to be paying the agent that represents you to buy it. The traditional arrangement is the seller pays their agent and their agent pays the buyer's agent. So I bring this up because people who've not bought a home before, they're like, how does this work? Do we pay the agent? I guess we pay. How much do we pay? Well, odds are high, like 99.5%, you're not going to pay the agent. It's just a rare case if your agent finds a property that's not on the market and that owner isn't willing to pay a fee. The agent's obviously trying to make a living. So they may say, hey, if you want to buy this property, you have to pay my fee. So just take that into account in the offer that you make to the seller. So the next thing on this list is deposit. The deposit amount is not a cost of buying. Sometimes people get a little bit confused. Usually when you write a check, that's a cost, right? But the deposit is part of the payment for the house. You just pay it upfront to show that you're serious. We call it an earnest money deposit. So that's not actually a cost. Now, a question might be, how much is a deposit? There's no set amount, but it's usually like 1 to maybe 3%. Now, another question people have is, well, what are my upfront costs before I even know if I'm actually going to close on the house? You know, my inspection and stuff like that. So, and this shorthand is going to be a little hard to decipher. But if you look at this, it's about $1,000 to $1,500 for your inspection and appraisal. It's about $1,000 to $1,500. So you might get into escrow, you know, get your offer accepted, you get into escrow, you start the loan process, you get the inspection, and whether it's the loan or the inspection or something else, you don't buy the house, you will have spent $1,000 to $1,500. The next thing is, okay, but what are my total costs to buy a home? So that's going to vary. So that's here. So your total cost to buy a home, if you're paying cash, they're probably ballpark about 1%. And if you're financing, then you have to pay the loan fees, the appraisal fee, a few other related fees, and that's going to bring it to about 2 to 3%. Would you say, Robert, about 2 to 3%?
Yeah, depends on the loan amount, but it's about right.
Okay. So you've got your down payment, and then you've got your closing costs. Let's assume you're not Mr. Moneybags and you're getting a loan, and Robert helps you. So figure 3%, just so you don't, have to come up with more than you expect. Now, the next thing I want to tell you is there are actual costs, and then there are prepaid items. So there are costs like inspections, etc., and then there's some loan costs, but there's some prepaid items, meaning sometimes or virtually always you're going to pay your first month's mortgage payment when escrow closes, right, Robert? Or part of it anyway?
You're going to pay the interest for that, which is like paying your first payment, but you skip the first month.
Right.
Because, but there is some interest you pay at closing. Yeah, that's like your first payment.
So let's say you find a home today, you close June 15th. Part of the money you have to bring in is going to be the interest for your July 1 payment. So you close June 15th, July 1, good news, no payment to make on your mortgage because you paid that up front, you prepaid it. But bad news, August 1st, yes, your mortgage starts. Other prepaid items can be property taxes. Now that can actually go either way. You might be paying some in advance, or you might get a credit back from the seller. I'm not going to go into why at the beginning, the weeds for these purposes. And those are like the two bigger prepaid. Actually, another one is insurance. Sometimes you pay like a year of insurance in advance. So those are not actual buying costs. Those are really owning costs paid in advance. And then the last thing I want to mention related to this is the seller can pay your closing costs. Having said that, in a hot market, it's hard to get the seller to pay your closing costs. Sometimes you can. In a medium to cold market, you're more likely to have the seller say, okay, I'll pay your costs if it means I get to sell my house. But if you're competing with 5 other people to buy a home, it's hard to get the seller to pay your closing costs. I'm going to quickly look at some of these great questions we've had in the chat. Okay, so VK asked a question. It's a little bit probably not going to be relevant to everybody here. So VK, I'm going to suggest that you text Robert that question. And then
you might be asking if you can use an equity line to buy an investment property. That might be.
Well, if you want to take it,
we can do that.
You can.
Well, you're asking if you have a secondary lien on your current home, you might mean you have an equity line, and an equity line is acceptable for a down payment because your borrowing is.
But it's going to be a little rough if we interpret the question to be, hey, I want to buy a home, and I've got a home, I've got a first, and I've also got a second. Can I get a third? Third loan is a down payment. That gets a little dicey, right, Robert?
No, not going to do that. No.
Okay, so that won't work. Then we had another good question.
You might be able to get a second. Might get a second on the purchase loan, but not the one you have. Yeah.
I'm going to ignore a comment from a guy on my team
Yeah.
But thank you, Kevin, for putting that in there. Appreciate that. And then DT says, is there a difference between a multi-unit rental and a commercial property in terms of loan, realtor, et cetera? I'll take the realtor part. Actually, I said that quickly, so I'll slow down. And I'm gonna say, is there a difference between a multi-unit rental and a commercial property in terms of loans, realtor, et cetera? So in the real estate world, a rental like apartments of 2 to 4 units is still considered residential. Once you get to 5 or more units, it's considered commercial. So generally, now Robert, you don't do commercial loans, right? Somebody has 5 units, do you do that loan?
No, we just do 1 to 4.
Yeah, okay, so it's gonna be a different lender. And then typically it's gonna be a different realtor. I have owned like several large apartment buildings, so I'm pretty familiar with it. So I have actually handled that. But your normal residential real estate agent, if you said, hey, I want to buy a 12-unit property, they might try to fake it till they make it, but odds are they have no idea what to do. Okay, so moving right along to the next mistake, hunting unicorns. What the heck do I mean by that? So what I mean is looking for something for a home that just doesn't exist. For example, right now, if you say, I would like to find a 3-bedroom, 2-bath house, 3-bedroom, 2-bath house in, kind of coastal central San Diego for $425,000, that just doesn't really exist. That's just an example. But what I particularly mean is there's you determine what you want and you go out and you look for it and it's not there. I've known of people that just keep looking and they keep looking and they keep looking. And if you're in a rare declining market, maybe you'll find it. If the stars align, you get very lucky, maybe you'll find it. But generally, you're just going to spin your wheels and not find something. So if you're looking and looking and looking and not finding what you want, I suggest you change a variable. That could mean talking to Robert and saying, hey, I'm at 4.25 and I'm just making up a number. What would it take to, I'm starting to see things I like for 500. Can I qualify for 500? Or maybe instead of buying a house, you say, you know what? I'll buy a condo. I'll buy a 3-bedroom condo instead of a house. Or, I'll buy something on a small lot, or maybe I'll buy a 2-bedroom house instead of a 3-bedroom house. Things like that. Just don't get in this holding pattern that just doesn't do you any good. If you really want to buy a home, that's not going to get you there. So if you're not finding what you want, if you're hunting unicorns, try to make some changes. Maybe say, let's take the horn off the unicorn and look for a horse or a house. Okay. Okay. So we've got another question from TW. Let's see. So TW says, on average, how much is insurance, property taxes, et cetera, on top of the loan payments? So property taxes, that's an easy one. Those are generally going to be about 1.2% of the purchase price in your first year. They can go up 2% a year. Generally speaking, that's the limit. So if you buy a home for $500,000, over the course, the annual property taxes will be around $6,000. That's actually taxes plus some add-ons. And I like using the 1.2% because then you can take that down to a monthly number and say, if I buy a house for $500,000, my taxes per month will be about $500. Now the insurance, Robert, I've got an idea, but can you take that one? What's the typical insurance on a house for 600,000, a 1,200 square foot house? Is that one you can rattle off?
Well, my average quote, on insurance is about $1,200 a year, but it could be a little lower for, older properties. It might be a little higher for higher end properties. And then it depends on what you want to insure. Some people want to insure more personal property, more liability.
Okay.
And definitely the rates are different with a lot of different insurance companies, but
So we've got a good idea, around $100 a month, give or take.
Yeah.
And then RS asked a good question, and this one actually, I've thrown the two relevant cards on the floor, and so that I don't like leave you for 5 minutes trying to find them, I'm going to answer that question. But this sort of ties into two things: the hunting unicorns and the good deal. There are very few foreclosures in San Diego right now. Everyone would love to buy one. There's different stages, and I'm giving you theory because in practice they're so rare, it's probably not really even going to be useful information. But you can buy a property pre-foreclosure, at foreclosure, or post-foreclosure. Pre-foreclosure is when someone is in foreclosure. That's when you're most likely to going to be able to buy one, but they're so rare. And yeah, maybe you can get a little bit of a good deal or not. At a foreclosure sale, you've actually got to pay cash on the courthouse steps, and it's typically sight unseen, and that's really only for the more sophisticated people with a lot of cash and that are willing to take risks. And I'm not saying you're not sophisticated. You may be very well sophisticated. And first-time buyer foreclosures, I would steer clear. The number of foreclosures that I bought, and I have probably bought and sold, I'm going to say 30 some properties. I don't know if I've ever bought one in foreclosure. I've almost bought one at a foreclosure sale. In fact, I'll tell you a really quick story. Gentleman who works with me, who's also on this call, he and I, a few years ago, thought we're going to buy some property at foreclosure sale. And so one we almost made a bid on, and then we didn't. And then just a total fluke, I happened to be next door to the house a week later, and the owner was like, "Oh, hey, come here. Let me show you my house." And I go in the house, and it's like a really nice house from the front. I go inside, it's completely gutted. There's no drywall, there's no kitchen, there's no bathrooms, there's no nothing. If we had bought this house at the foreclosure sale, oh my gosh, it would have been a disaster. So first time buyer, do not buy at a foreclosure sale. Post foreclosure is when the lender already owns it. It's going to go out there on the market. You're probably not going to get a particularly good deal on that either. So I don't mean to be negative, but just foreclosures, there are probably other parts of the country where they are a big part of the market, but not in San Diego and not now. Okay, mistake number 9, slow to offer or counter offer. So you are looking for homes and you find a home and it's like, I don't know, maybe, maybe not. Well, take your time, make sure that you know if this is the right home for you. On the other hand, you're looking for homes and you come across one, you go like, this is the one, this is perfect for whatever reason. Your mother lives next door. It's the neighborhood that you love. It's got great schools, the house itself, whatever it is. If you know it's the one, don't think about it for 3 days, because if it's a nice house, then other people have probably seen it and they're also thinking about making an offer. And I can't tell you how many times I have worked with people. Typically it's on the seller end because I have a different perspective, where we get an offer and we accept it, and then like 10 minutes later another offer comes in and it's too late, and that other buyer would have got it, but they waited. So don't make an offer if you're not sure, but once you're sure, don't hesitate. That's my advice. It's a mistake to hesitate. Okay, number 10, expecting the perfect home. So we're talking now, your offer's been accepted, congratulations. We're talking about inspections. So unless you're buying a new home, you're not buying a new home, but people will have the home inspected, and I think maybe their expectations have not been set or helped by the realtor. So they buy a home and the inspector's job is to find every imperfection. Now, my home that I live in has plenty of imperfections. If you were buying my home and you had it inspected, you'd get a long list. The point is that you're not getting a new home, so don't freak out when you have all these things. Now, yes, if you find out that the house is sliding down the hill, that's a problem. Maybe you don't want to buy the house. If you find out that if the roof is shot and it needs a new roof, yeah, that's an issue. It's worth negotiating with the owner to see if they'll pay for it or pay for half. But when you get kind of what I consider to be the normal list of things, which is, well, the electrical is okay, but it's if you were to add an air conditioner and a this and a that, you'd have to upgrade your electrical. And, the roof is 10 years old and it's got a 15-year life on it. And there's a plumbing leak in the tub and a lot of little things. That's pretty normal. So yes, you can ask for them to be fixed, but don't expect, here's what's not going to happen. Or you say, here's the report with all the imperfections. Here's the list. Please fix them all or credit me for everything. That isn't going to happen. So it's best that you have realistic expectations, and that is that the seller may or may not negotiate and credit you for some of these things, but you're not going to get a perfect house. So I just want you to have, correct expectations there. Okay, so that is number 10. That means we've got 3 more. Actually, the timing working out pretty well. Number 11, lazy river. Okay. Who's ever been to a hotel that's got one of those lazy rivers? It's like the circular river. You get in an inner tube and you just float around. Maybe you've got a cocktail, and it is so relaxing. You get to be a sloth and you just sit back. Oh, just so relaxing. Escrow is the opposite of that. Escrow is when you need to do things quickly. When Robert says, hey, I need another pay stub because the one you gave me is getting a little bit too old, so we need a new one. And then, oh, you probably just did your taxes. We need to get a copy of your return. You need to jump on that, because if you go, oh, you know what, it's Monday, I'll get to that on the weekend. You do that a few times and your escrow is going to close late. And then maybe the seller is going to say, I'm sorry, you are not in keeping with the contract. I'm not going to sell you the house. Or maybe you lose your deposit or something. So you want to move quickly. And a question I like to ask Robert, who's the fastest person you've ever worked with on getting loan papers when you're doing a mortgage?
Oh, well, let me think about this. This guy named Gary Kent.
That's right. So I'm sort of
When
like
I ask for things,
I'm kind of a freak like this, that first of all, I know what Robert needs for a loan. So that's kind of cheating. But when he says, hey, need a copy of your tax return, I just go and I find it and I email it to him like 5 minutes later. So
yeah,
it's good if you're like that. But if Robert, or let's say you're crazy and you use someone else, if your lender says, I need your tax return, try to get it to him that day, because there's a lot of processes that are steps. And if you are slow in step 1, step 2 doesn't start. And if you're slow in step 2, step 3 doesn't start. So lazy river, no.
no.
Next thing, late close equals disaster. So what do I mean by that? You should do everything you can to close on time. The seller should do everything they can to close on time, the agents, the lender, but you don't always close on time. So while you should be doing everything to close on time, you should be prepared for the possibility that you don't. What I've seen, and this, I'm going to blame this on some cases, the real estate agent, they don't tell their client like, hey, we're shooting for this date, but it's not set in stone. You don't want to say, okay, for the next month, I only have 1 day that I can move. I've taken 1 day off of work and I've rented a truck, and that's it. And that's on the day we close. And then what happens if you don't close that day? I've had agents call me and say, our client has their moving truck. Can we move in even though we haven't closed? And the answer is usually no, you can't, because it's not your house yet. And the seller, for liability reasons, typically doesn't want anybody moving in. Maybe the seller's still there and they don't want roommates. So you need to have some flexibility so that you don't have a disaster if you close late. So that's late closing equals disaster. And you need to have a drink of water. Let's see, just let me check on the chat. Okay, no new questions. By the way, if I missed anyone's question, I apologize. I'm scrolling, could have missed somebody. So mistake number 13, and I purposely made it number 13 because it is the worst mistake you can possibly make when buying a home. And that is falling victim to a wire scam. So you may or may not have seen this on the news. It was probably 2 months ago. There's this couple in San Diego, seemed to be like just very sweet and wonderful people. they got scammed almost $800,000, and that money is gone. They will never get that money back. And here's how these wire scams work. So a very, very bad person, a scammer, I think they're typically offshore somewhere. I don't know where they are. They hack into the escrow company's email server, and they see, oh, okay, here are the people that are buying homes. And then they create an email address, excuse me, that's almost identical. So if it's like, ABC escrow, they might put like ACB escrow or something, but probably something that's even better than that, or harder to detect than that. And then they send people emails saying, "Oh, hi, this is John or Sue from ABC Escrow, and we need you to go ahead and wire your down payment funds to this account." And it looks exactly like a real email from the escrow company. And the natural inclination is you go like, "Okay, I'll go ahead and wire my money then." Well, you know what? If that goes to a scammer's account, it's probably going to be gone. I'm not a wire expert, but I think there can be a very short period of time where you can pull a wire back. Robert, is that right? A short
I've
period?
heard that too. Yeah.
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 After that period of time, that money is gone and you're never getting it back. I had a transaction 2 years ago, I think, where the buyer, I don't remember I think they wired their down payment money, and it was like $13,000 or something. And fortunately, right before the cutoff, they realized it was a scam and they canceled it and they got their money, but they almost lost whatever I think it was like 20,000 even. So I want you to be paranoid, not just careful. I want you to be deathly paranoid that you're going to get scammed. So that if you get an email that looks real, and I don't know if scammers are calling, but I'm even going to say if you get a phone call from somebody you don't know saying, here's where to send the money, that you go, wait a second, I'm going to verify this. I'm not wiring my money anywhere until I know darn sure that this is the right place. So when you make an offer on a property, you're going to get a form. I don't remember what it's called, but it's like a wire scam alert form, and it gives you some good information. So I want you to read that. But I'll just tell you quickly, what I suggest is before you wire any money, you call the phone number that you know is the escrow company's number, not the phone number on an email, but something you know independently is the escrow company's number. And you talk to someone you've talked to before whose voice you recognize, and then let them tell you what the account number is. So I don't know if scammers are doing this where they're having fake phone numbers, but if they don't now, they could in the future. So you want to talk to somebody you've talked to before, and never, ever, ever, ever wire any money based on an email, because that's generally how the scam works. So it's voice to voice, not an email. And if you get somebody that says, oh, you know what, we told you the wrong account number and this is an email, it's really this number, don't wire your money.
Mm-hmm.
Okay, we've got a couple of
people,
questions. What's that?
That's what happened to those people. They had the wire instructions in writing from the escrow. At the last minute, they got an email, oh, we had to change. We need to change the routing number on that. And they didn't call anybody and wired the money on the off the email, just like you said. It's terrible.
Okay. So, so we have about 5 minutes left. I'm going to answer a couple more questions. And let's see. So wire scam, we're done with that. So the question, how long does it take to find out what loan amount you would be approved for? Does that process affect your credit score? Thank you. Do you want to take that one, Robert?
Yeah, that's a good question. Well, first of all, to get pre-approved, I do have to run a credit report. Now, just running one credit report, a couple of credit reports is not going to hurt your scores. There's maybe your score goes down 1 point or something like that. When you go online and you go to Lending Tree and all these places, that's when you have a chance of a lot of credit reports being run on you, because they put it out to all different lenders that want to compete for your business.
Okay.
So you want to do that. But to find out what you qualify for, it just depends how detailed you are. Like when I talk to you on the phone, I can give you a pretty good idea right away if there's nothing unusual about your financial position. But then we want to follow up with paycheck stubs and bank statements to verify what we've talked about verbally, so I can verify that. Do have to run a credit report and get some documentation. But a quick little thing over the phone, I can do that pretty fast if you give me the right information, but it's not cut in stone. So we need to go a little farther after that.
Okay, very good.
To get the full approval, it might take 24 or 48 hours at the most.
Okay. And then RS asked a good question. How do, and it's almost like I paid him to ask this question. How do you look for a good or quality agent? What are the things we need to look for before selecting an agent? Actually, that's not even an easy question to answer, because when you're choosing an agent to help you sell a home, there's a lot of statistics that you can look at to see, like how many homes have they sold and how long did it take to sell and what percentage of the list price did they get and things like that. For the agent who's helping you buy a home, those statistics, yes, you can look up how many homes. When I say look up, they can give you information on how many homes they've sold, but the other stats don't really work. So it's not that easy to do. So, I mean, I would just say someone that you feel is an expert, maybe someone that your friends have worked with and your friends are savvy and they know that the agent is good. You know, obviously, I'm not in the webinar business. I'm not doing this webinar because I make a living doing free webinars. So the point being that I would love for you to work with us. So thank you for asking the question. Perhaps I'll do another webinar in the future going into detail. So we're a couple minutes away from being done. So I want to circle back to something we said before, which is the free appraisal or home inspection value up to $600. So the way that you can get that is the first 3 attendees, and I don't know, I'll have to talk to Robert, maybe we'll make it more than 3, but for sure the first 3 that set up a phone, Zoom, or live, but you know, face mask appointment, when you work with Robert and myself or my team to buy a home, then Robert and I are going to pay for your appraisal or your home inspection up to $600. So that's how to get that. So I want to give you Robert's information on the screen. So this is Robert. He's with Finance of America. And by the way, I want to mention I've worked with Robert, I think 31 years now. So I'm very particular about who I work with. So that's why I use Robert. He's very good. So here's his contact information. Phone number 858-414-6900. Email rgeiler@financeofamerica.com. I think everybody on this is watching it, but if you're just listening, his email is rgeiler@financeofamerica.com. So if you want to set a phone, Zoom, or live appointment with him, and then my contact information is this. That is me, Gary Kent. I'm with Keller Williams Real Estate. My phone number is 858-457-KENT. For those of you that hate vanity numbers, that's 858-457-5368. My email is gary@garykent.com. And I guess, let's see if there's any other questions. Those are all the questions. Oh my gosh, we've hit 6:30. It's been exactly 1 hour. So I want to thank you very much for joining in the webinar. And I want to encourage you to reach out to us. We'll be happy to answer your questions. Robert will be happy to help you with the loan process. I and my team will be happy to help you find a beautiful home or investment property, whatever it is you're looking for. So thank you for joining us. And I guess that's it. So have a great evening. All right.
Thank you very much.
Thank you.